Hi, I'm Tom Lydon, editor of ETF Trends, here in Chicago at the Morningstar ETF Invest Conference. And my guest is Bill Belden, who is Managing Director of Product Development at Guggenheim Investments. I got that right?
You got it right. Great to be with you, Tom. Thank you.
Thanks for being here. Listen, there's a lot of talk about fixed income. There's been $1 trillion that's gone over to the fixed income area in funds and ETFs in the last year. Huge kind of race to yield, right? So Guggenheim has been very creative in this suite of BulletShares ETFs. Spend a minute and explain the strategy.
Right, and we're very fortunate to be in the position to capture some of that activity within the fixed income space and have delivered to the marketplace a pretty innovative solution with our BulletShares ETF suite. Tom, what it delivers to investors and their advisors is the ability to capture the best of investing in a bond fund with the defined maturity aspect that aligns with owning an individual bond.
Okay.
So the beauty of these ETFs, and by the way, we have two suites, one in investment grade corporates and one in high yield corporates.
Okay.
And the beauty of them is at the end of the calendar year in which they're designed to mature, the proceeds are delivered back to shareholders, similar to how a bond would mature.
So it matures, money comes back to you, and that's it, and you close the ETF.
That's exactly right.
Okay.
So last year in 2011, we matured our first investment grade corporate BulletShares ETF, delivered the net asset value back to shareholders at December 31st.
Okay.
And this coming year in 2012, we'll roll off our second one on investment grade and our first in the high yield suite.
So investors know what the yield is because the bonds are already in the portfolio.
That's right.
And you hold it to maturity.
That's
You
right.
get your principal back, and that's it. So, and the idea is it's diversified.
Right.
And so you've got a little bit of everything in there.
Right. So remember, part of the challenge with investing in alternatives is, one, when you're investing in a bond fund, you don't know exactly what the duration or the portfolio characteristics of that portfolio might be on an ongoing basis.
Right.
The beauty of the BulletShares, remember, is that we've had 2012 through 2020 funds, and in each one of those individual years, you know exactly what your duration is, you know exactly what your portfolio holdings are at any particular point in time, so you've got complete transparency, and you know what the impact of that exposure will be on your overall portfolio.
In a regular fixed income fund, at different maturities in different areas, you're also susceptible to interest rate risk.
Exactly. And as a matter of fact, in the case of the BulletShares, we see one of the biggest uses of those products is with laddering portfolios.
Right.
So you take a series of the BulletShares products and you ladder them effectively with successive maturities, and as each fund matures, you can take those proceeds and put them back to a longer maturity, which really basically offsets the interest rate risk in your portfolio because you're getting that principal back and you've got the spectrum covered from short to longer dated maturity.
Okay, so you've got how many different BulletShares are there?
We've got 9 in the investment grade suite, and we've got 7 in the high yield suite.
How far out do they go?
In the investment grade, they go from 2012 to 2020, and in high yield, we go from 2012 to 2018.
So if you're trying to get greater yield for your clients' portfolios, but you're also concerned about interest rate risk.
Sure.
This is something where you can ladder in different areas, hopefully enhance the yield. But if we do see rates go up, and there are a lot of people that are saying even though the Fed has pushed off rate hikes until 2015, we still can see yields go up and bonds will be affected, that here's a way to kind of mitigate that interest rate risk.
Absolutely, yeah, a great solution for laddering bonds, and like I said, the advisors are actually taking a lot of proceeds within their client portfolios from individual bonds that are maturing and redeploying those into the BulletShares.
Okay, I'm learning more, and for full disclosure, I am an independent trustee on the Guggenheim Funds Board, so that's important to know as well. But every time I talk to you, I learn that much more too. So, Bill, thanks for spending time with me, and enjoy the rest of the conference.
Thank you, Tom. Great to be with you.
This is Tom Lydon, editor of ETF Trends.